Hello, welcome back to Savvy Market channel. We are delighted to have you here on the channel. This is a moment of appreciation for all of our subscribers, both new and existing, and we are thanking you in advance. If you are yet to subscribe to the channel, please kindly hit the subscribe button if you're seeing this video, and click the notification bell. And in the course of this video, or at the end, if you like what you hear or what you see, please don't forget to hit the like button. And also we have the comments box there, and that's open to your opinion, your perspective, what you think, if there's something else you're seeing for your questions and all of that. So you can just drop that. We would like to know what you think. If there is a request you also have to make, do not hesitate to drop that in the comment section. We'll be glad to attend to that as soon as you drop it. All right, so as is our custom, we'll dive into a brief overview of the company we'll be analyzing today, and that is Conoil Plc. A lot of us must have come across this company, maybe on our way to work. Maybe we want to get fuel for our generator or engine or whatever. One way or the other, you might have come across this company. But then if you have not, then today is the right time to get a brief overview of them. And so for even people who have an existing knowledge of the existence of this company, that do not know anything so much about them, rather this is an opportunity to get a brief overview. So let's just dive in, and then after we get the overview of the company, we'll talk about the net profit margin, and then we'll look at what the numbers are saying, what the implications are, and then that will be it for this video. So the company profile. As we know, Conoil Plc is the name, and they are a public limited liability company. So it means that they are a PLC, that is, they are listed on, their stocks are listed on the Nigeria Stock Exchange, and then so people can invest and buy their shares and all of that. And this organization is in the energy, oil and gas industry, and they were founded in 1927 with their headquarters in Lagos, Nigeria. So they have several business segments, which include white products. So when we say white products, we mean products like petrol, diesel, and kerosene. Then they have lubricants, which includes engine oils, petrol, and they have this golden super. So you might, for those of us using cars or using any sort of engine that requires lubrications or lubricants, you might have come across golden super one day or the other. Maybe you didn't buy it, but you didn't saw it in the store. So this is one of their products. They also have the liquefied petroleum gas. They have aviation, so jet fuel. So the aviation oil, the aviation and gas is for jets. So that's what plane uses to fly. So plane doesn't use this diesel or gas or whatever. So they have their own specified fuel. Then we have other specialized products like that for them. So they engage in exploration and production. They are also involved in refining, marketing and distribution. They also do retail, which are the service and fuel stations that you see, and also industrial sales. So getting into a brief of their financial highlights, their market capitalization is approximately 116.6 billion. Their 2022 revenue was 134.8 billion, with a net income of 2.4 billion. That seems profitable to me. And their earnings growth is 21.2 percent. So the 2022 net profit and revenue actually is reflecting that they have grown 21.2% than they were in the previous year, which is 2021, and their stock price also increased by 109.5%. So this actually indicates growth in the last 3 years. Now some of us might be familiar with Dr. Mike Adenuga. So Dr. Mike Adenuga Jr. is actually the chairman for this company, and the managing director, which is also the CEO, is Dr. Adewale Abayomi. And so also this company has actually attracted some awards and recognition, and one of that was given them by the Nigerian Stock Exchange as the best performing stock. They've also received an award of the most innovative oil and gas company, and that was awarded them by the Nigerian Oil and Gas Awards. And also the Nigerian Auto Awards gave them the best lubricant brand for the year. And so as we know, as other companies, as the custom of many companies, they are also in partnership and collaborations. They have joint ventures with international companies. They partner with local and international suppliers, and they collaborate with industry associations as well. So because in the oil and gas sector they have industry and associations, and once you are an operator and you're not in these associations, you can't really operate successfully in the industry. So I think that's a good dive for them. And also, we know that there are challenges and opportunities for every company in these times. And for Conoil, one of the challenges they are facing is that they are experiencing fluctuation of global oil prices, and that's affecting everyone. And there is also increase in competition in the Nigerian market. And the opportunities for them is that the energy industry is actually a growing one. It's actually growing. So there are opportunities in Nigerian green energy demand, and another opportunity is that they can expand into renewable energy. So that wraps it off slightly for the Conoil PLC's overview, and except for the fact that let me just put this in. So they actually prioritize and sustainability through environmental responsibility and community engagement. And as Nigeria's complete energy provider, they also focus on leveraging talent and technology in petroleum exploration and production, including manufacturing and marketing of refined petroleum products. So this organization aims to minimize its ecological footprint, ensuring that its operation do not harm the environment, which is which is a primary responsibility of such companies. And they also invest in education and healthcare initiative, contributing to well-being of local communities. So that's actually the way they give back to the community. So also recent news about them covers that they actually announced an annual generation meeting, which is holding next month, or when I say next month depends on where you're watching this video. So we are actually in October, and next month happens to be November 15, 2024. And additionally, their first quarter for 2024 showed that they have, even though this video doesn't cover 2024, I'm just giving kind of recent news about them. It shows that their first quarter earnings showed 6.26 naira earnings per share, which surpasses the previous year of 4.34 naira per share. So that will be all I give about the overview for this company. I hope that threw some level of light into the status of the company. All right, so let's shift a bit into what profit margin analysis is. So profit margin, which is also known as net profit margin, according to this video, is a financial metric that measures a company's profitability as a percentage of its total revenue. So it's saying, out of the revenue we've made this year, what part of that revenue, what percentage of that revenue are we keeping as profit as an organization? So for instance, you have sold something, maybe your personal business. Now you have made the sales, so considering all of the costs and expenses, tax and all, what percentage, what proportion of that are you keeping as your profit? So that's what the profit margin analysis is saying. So it's saying what percentage of the total revenue we're keeping as profit. And it actually have different types. We have the gross profit margin, we have operating profit margin, and we have the net profit margin. So this video covers the net profit margin. So there are some implications. So the profit margin analysis provides valuable insights into a company's profitability, their financial health, their competitive position, and their investment potential. So it shows us the company's ability, the percentage shows us their company's ability to generate earnings from sales. So how well is this company able to generate earnings from sales? It also shows the efficiency in managing costs and resources. So how well they manage their costs, shows us how well they manage their resources. It helps us to compare company to company within the same industry. So for instance, we can be comparing Conoil to NNPC because they're in the same industry based on their profit margin analysis. So we can know which company is more profitable, which company is safer to invest in, and also it attracts investors. So the bigger the profit margin, the more attractive the company appears to investors. So also there are some there are some factors that can influence the profit margin. So just like every other metric. So and the internal factors could include pricing strategy. So change in pricing policies can actually can influence the profit margin. The cost control can impact the profit margin. The production efficiency can also impact that. Marketing and sales. So effectiveness of sales and strategies is a great determinant of profit margin. And research and development. So investing in innovations can be a very smart way to positively impact profit margin. So some external factors that can influence this metric include market competition, economic conditions like inflation, recession, interest rates, and all of that. So the current situation of the Nigerian economy right now, the current state of Nigerian economy right now, has a significant impact on the profit margin of different organizations. So regulatory environment also influences this, change in laws, regulation, and taxes. So also global events can cause that, which includes natural disasters, political instability, could also influence this metric. Also technological advancements, supply chain disruption, and currency fluctuation. So these are things that can affect or influence this metric. So now, what do the values say? Before we dive into the numbers on the screen, what do these values say? So a higher profit margin indicates that there is better cost management, there is effective pricing strategy, there is strong competitive position, and there's attractive investment opportunities. While on the other hand, a lower profit margin may actually indicate that there is inefficient operation, there is poor pricing strategy, there is intense competition, and there is financial distress. And the limitation is that this metric might not reflect cash flow. It does not account for depreciation, and it can actually also ignore operating income and expenses. So just like a summary, the profit margin actually provides valuable insights to a company's financial health, their profitability, and their competitive position. And that's actually it. And understanding this metric can actually give you insights, whether you are an investor, whether you are a manager, whether you are an analyst, or whoever you are. It can just help you make informed decisions when it comes to business. So let's just take a walk through these numbers. So from my research, I saw that the benchmark for this company is actually from 6% to 10%. But then taking a look at this graph, taking a look at this chart, you will see that none of the values actually hit 6%. But then we saw here that in 2023 the performance was quite high. It's the highest in 10 years, and in 2014 was the lowest. So we see the fluctuations here. I think from 2017 to 2020 the discrepancies were not much. We saw the jump from 2014 to 2015. That was a very significant increase, and then 2016 followed suit. But then unfortunately there was a decline in 2017, and this is 1.37%. So we then began to see from 2021, where they had 1.23% profit margin. And so moving on from there, we see a spike from 2021 to 2022. That's about 200% increase from 2021 to 2022, and they were able to not just maintain that but also improved on that in 2023. And this is also a very significant increase between 2022 and 2023. So I have the impression that this company is working so hard to at least reach the benchmark, and I hope that they will be able to achieve that in 2024, because I believe that they should be able to hit the 6%, or they should have hit it by now. Based on because earlier when I was doing the overview of the company, we saw that there was actually a very significant increase in their earnings per share, and I hope that will reflect in their profit margin for 2024. So we see the performance of this company, and in my opinion, I would say this is not so bad, because the profit margin I've analyzed for company in the past 3 months, I always see a lot of companies that go below the line. So but for this company, fortunately, all of their records for the last 10 years has been above the line, and this actually indicates a level of operational efficiency. It shows that they are actually good with their pricing strategy, and also a whole lot of other efficiencies. So it shows that they are performing well when it comes to their financial performance is not so bad in itself, and this actually indicates profitability to some extent, even though it's still below the benchmark for this industry, which is 6%. So I hope that gives clarity about this video. Thank you so much for watching. I do really appreciate your time. Also, if you haven't subscribed to the channel up to now, please kindly hit the subscribe button. That encourages us to do more, since we know that we are reaching more people. And if you have watched the video until now and you're yet to click the like button, please kindly do that if you happen to like this video and you feel I have given all the necessary information that should be there. And if you disagree with that, just drop your comments in the comment section. I would like to know what you think. I would like to know what you thought I could have done differently, and I would not hesitate to implement that and put it up in my next video. All right, that brings us to the end of today's video. Thank you so much for staying to the end. I do really appreciate you. and then until we see again, bye bye.